Yo, what's up everybody? I hope you're all doing good. Um, Today I'm gonna do a little live backtest basically, just to show you the strategy a little bit more. And I've also built this like basically a 27 sheets. Yeah, what is it? Presentation about the strategy. I think I'm gonna make like a smaller version, a little bit simpler version. It's in the make right now. So that's pretty nice. If you are interested in it, yeah, join the community, subscribe, comment, like all that stuff, and join the Discord. And I can share it with you. Basically, the strategy is a pro trend strategy. Very simple, nothing too complicated. I can show it based off this picture probably. Basically, we look for the pro trend, so we draw up the Fibonacci retracement from in a bullish trend from bottom to top, and we wait for a retracement into the golden zone, basically the 0.5 to 618 level, and from there we wait for a doji rejection candle. Other confluences we like are an EMA. We like EMAs. We like trend lines. We like areas of interest as like bonus confluences. But the most important thing is pro structure, like pro trend, doji confirmation basically, and ideally also in the fib level, like in the golden zone. That's basically the main thing about the strategy. Very simple. Um, that's so. Let's just dive into like I don't know, let's Euro USD or something. Euro USD. Um, I don't know. Shall we do March this year or something? I don't think it was the cleanest auto end date, just to show you if we can find some simple setups and show you how it goes in live. So if we're gonna keep it simple right now, we like the bigger what's it called? We like to look at the bigger trend. So like on the 1 hour, um, we can see that it shifted to bullish, right? Like this was the previous higher low, this was the lower high, and it broke. So right now we're bullish. This being the higher high, this being the higher low. So from here on out, we can see if price actually reaches the disc or the discount zone. So let's trail the area, and it did hit the area. Let's see if we actually got a doji in there. Yeah, we got a perfect doji in there, so I might have skipped too early, too fast. But yeah, as you can see here, it reached 0.5 level. We got the doji, and from here I would be interested in jumping in. For simplicity reasons, you can um, put the stop loss basically under the 0.618 level, and targets. There are multiple ways what you can target. You can be conservative, where you target 80% of the leg, which would be this. So for 2x in this case. You can also go for like the full leg to be sort of hit, or you can go for a runner, where this would be a runner and this would be like a conservative um, place where the trade can also go. Basically just continuation, right? Like this is a continuation TP, this is a runner TP, like it continues but it runs really far. And this, for instance, could be a trade you could be taken. We would be looking for like, is there an AOI? Like to the left, I can't really see an area of interest. Area of interest basically support or resistance. Trend line, don't really see it too strong here. Maybe this is a trend line, but yeah, it's covering like the stop loss a little bit. So that's nice, but let's see if we enter here. Another variation how you can enter is tighten stop loss under the doji, and you get a much better risk reward ratio. I prefer dojis to happen in the middle of the golden zone, because then you can actually have the stop loss under the golden zone and still have a very nice risk reward ratio. So we're in the trade, and let's see what happens here. It actually flies up pretty nicely, And I think in live, you would probably already sort of tighten your stop loss. You can tighten your stop loss, for instance, under the structure, you secure 3x and your TP is at 6x. Let's see. It is really fighting, so it might, yeah, okay. So we actually secured 5.8x. Very simple, very straightforward. So what we did, we drew up the leg on the 1 hour in this case. We waited for price to reach the discount zone, so the 0.5 or like in between the 0.5, 0.618. And we wait for a doji, which happened on the 5-minute time frame. So what you do, you basically can set like an alarm around like the 0.5 level, and you yeah, you can go from there, watch the chart and enter whenever there's a doji. No doji, you just don't enter the trade. It saves you a lot of losses. As you can see here, you can target pretty big risk reward ratios, and oftentimes I also like, whenever I'm trading live or challenges, I like to trade with a tighter stop loss under the doji. So in live, I would have probably taken it like this. On a funded account, I would have done the first thing with like the stop loss under the 0.618. But here I actually, like on a challenge account, I would probably have my stop loss like this. And then as you can see, you can have like a very big risk reward ratio. This was 13.5x, but you can be more conservative. 3x would be, or like targeting 80% of the leg. So very conservative TP would already give you 5x. So that's really nice. Having sometimes a tighter stop loss is a way to really increase your risk reward ratio and take advantage of the strength of the dojis. I don't know if like I want to do another trade, but let's see if we can find another one. Just a simple example. So let's see. From here, like we just had that leg, right? Like where we took it from. We can basically draw a new one. There are multiple ways to go about it, basically. It works pretty much on any time frame, as long as it's like pro trend. Here you could, for instance, draw it two ways. You can either go for like the internal structure, because the internal structure is sort of shifting to bearish, as you can see, or you can go for like the bigger move. Right now, we're gonna see if there's gonna be like a doji in here, like in the bigger move. If there's no doji, we don't take the trade. Okay, so it's continuing, so we're not really interested. Maybe it creates like a doji-ish, yeah, maybe this becomes the candlestick we wanted. Oh yeah, this became the candlestick we wanted. So in the 30-minute there was a doji. Mind you, there's a very big wick, so I don't really like it too much, but you could go for a trade like this. Same thing, continuation, TP, 7x. Normally I prefer the stop loss to be under the wick, but yeah, right now I just have it under the 618. Because the wick is just very big and it will take away a lot of the TP, a lot of your profits. So let's just run it like this. I don't have the highest fade in this trade, to be honest. But then you also have the option to go for a short based off, based on the structure break. As you can see on the line chart, we shifted bearish. So you could also go for a retracement to this area and then for a short. So, and I think both are profitable in a way. Like you can see here, for instance, did it reach and did it give a doji? It did reach the area, I think. Let's see. Yeah, as you can see here, this rejection happened perfectly on the golden zone. So maybe on the 1 minute we have like a doji-ish candlestick. No, we don't. So sometimes you don't get the doji and you don't enter, but you can see the zone is getting very well respected. Wherever it makes sense to draw it up from, I've noticed it just works pretty well. But we're still on this long. Don't want to confuse you guys too much. Yeah, it's going to be a loss, but that happens. So if you, for instance, went for the short instead of this, so you followed the line chart like this, you followed the line chart, went for the break of structure, then here you could have taken a win, like you could have looked for a trade in here and you could have potentially taken a win. Just so to show you that the zone is pretty strong, you could consider this It's definitely a rejection candle. It's not a doji like that we look for, but in the presentation we have like a list of the candlesticks we like. Where is it? This, like it would be a shooting star, right? This one. So oh sorry, it is. Do we have it drawn up? No, it's like a gravestone, but like with a little bit bigger body. But it's definitely a rejection candle. So in this case, if you saw this trade, you were going for the counter trend one. You could have gone for the same TP with like the 0.27, or more conservative. We don't know yet if it will hit. This, yeah, it would have hit the 0 minus 0 .272. So as you can see, sometimes you lose some trades, but if you look the other way with the line chart, you could have opened basically with two different prop firms or two different accounts. You could have looked for the long, lost the long this time, but then you went for the short and you would have won the short. Or you could have even, tightened your stop loss on the long because you had some time to tighten stop loss, go break even on the long, and take a really nice W on the short. So yeah, I hope there is some value in this video. It's just me opening the chart and already showing that there are quite some examples of trades out there that you can take. This was a 6x, and then this short was a almost 7x or 6.5x, and then we took one loss on the long, but you had time to tighten stop loss if you wanted to because it already reached 2x. Yeah, so it reached 2x before losing. So even this one, the long, you could have prevented yourself a loss if you wanted to, or secured a small profit. So yeah, this was just I hope this was like educational and you guys like this sort of content. Please let me know, because I am sort of figuring out what you guys want to see. And what is valuable to you guys basically. And yeah, if you like to get like a version of this guidebook of the strategy, yeah, join the Discord, subscribe to the YouTube, comment, like, show some support basically, and let me know through the Discord that you want this yeah, this guideline basically. I think it's a very good strategy. I've been using like a variation of this, like this. There are 6 confluence in here, and I've been trading with those confluence, or at least more, like 4 to 5 of these confluences, for a long time already. But right now I've made them into a list and like grade them basically based on required versus optional, and yeah, I think it's a really strong strategy we've built. So yeah, if you're interested in that, let me know. Thank you so much for watching. I hope this was good, and yeah, see you in the next one hopefully. Bye bye.